Hey guys, Boris, welcome to our weekly major technicals for August 29th to September 2nd, 2016 for Euro, Dollar, Yen, Pound, Dollar. The question, of course, in front of everybody is hike. How quickly things change in the FX market. I mean, if there was anything that I think proves the value of my column from a couple of weeks ago, for those of you who read my column on a weekly basis, I said it doesn't matter how much technicals you trade, if you do not understand, if you do not pay attention to, if you're unaware of news, nothing you do on a technical side is going to matter, because news will obliterate whatever technical ideas you have. And this week was just a perfect example of how nothing, and then in a matter of 3 hours, boom, 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 Janet Yellen comes out, of course, Jackson Hole on Friday, and pushes the dollar much higher, reverses all the flows that we saw for this week. If you were just simply following wiggles on a chart, you'd follow like a blind lemming right into the idea that the dollar was a sell, the euro was a buy, blah, 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 so on and so forth, and you would have gotten yourself completely handicapped on Friday. But Friday was a major reversal in the dollar, a very, very interesting amount of changes. Of course, the really big event now this week that's coming up is going to be the non-farm payrolls on September 2nd, which is the U.S. Friday. We're going to be looking, obviously, for about 200,000. If we can come anywhere near that level, the prospect of a September hike, something that I thought never would happen. I still believe it's a little bit of a long shot, not because of the economic background, but because of the political background, because this would be right smack dab in the middle of election cycle. But I don't know. At this point, there's such a pressure on the Fed to kind of put up and shut up. And given the fact that the economic data has been relatively robust, they actually may pull the trigger in the midst of an economic cycle. And especially, ironically enough, it's the fact that Hillary Clinton now is favored 90% to 10% by the bookies to win. They may feel at this point anything they do isn't going to overturn the election and therefore not interfere with the electoral process. So ironically enough, the better Clinton does as far as in the polling, the freer it becomes for them to consider the possibility of a hike in September. In either case, this has completely changed, I think, a lot of the sentiment in the market, at least for the front part of the week. And I think the whole idea this beginning of the week has to be buy the dips in a dollar. Buy the dips in a dollar, buy the dips in a dollar, because until and unless we get the resolution on Friday, what I mean by this is that Friday basically is kind of a binary event. If the numbers come in anywhere close to 200,000, that really, really confirms the whole U.S. recovery thesis, Fed tightening thesis, pro-dollar thesis, all of those things that I think puts the dollar bulls in the driver's seat. If, on the other hand, we have, let's say, an incredibly weak number on Friday, certainly that upends the sentiment the other way. But in the meantime, just like the benefit of doubt was pretty much to the anti-dollar flows for most of last week, I think the benefit of doubt this week from the front of the week is going to be to the pro-dollar flows, and therefore technically you really just want to buy the dips in any of the charts that you see on the majors. So without much ado, let's take a look at the support resistance levels here. The support resistance obviously have moved down a little bit, and the euro dollar is very interesting, really from a technical point of view, just a sort of a very, very big move to the downside, big reversal. Typically those kind of huge reversal candles like we saw on Friday, very much have a continuation pattern to them technically. And this is where I think the technicals and the fundamentals really kind of align, at least for the front of the week, to buy the dollar, sell the euro, sell the pound in a smaller basis. We'll take a look at the charts here. So basically, resistance numbers, support numbers, euro dollar 1350, 1100. Dollar yen has now really moved up towards this 103 critical breakout level to the dollar yen. Now the support stands at 100 instead of 99 because they tested 99 a couple of times, or 99.50 a couple of times. They certainly bought it, and now this big breakout above the 101s, very, very powerful. We're certainly, I think, going to have a chance to run the 102s on the Sydney Open when we open up trade in Asia later today. And pound dollar resistance 133, 130 sort of staying in the same range. Let's just take a look at the charts here and proceed from there. So here's what I want to show you. So here's the euro move huge reversal candle. Also, by the way, this is very interesting. There's just many technical confirm points saying that you want to sell the euro at this point. It was a sentiment turn. You have on a longer term basis, you certainly have a failure of lower highs continuously. On a shorter term, you actually have a failure of lower highs off of Friday, right? 1350 was the big resist level. It tested it a couple times. It failed on Friday to even take that, and then broke down, took out the 1200s. Now 1150. 1150 is actually sort of the near-term support, and I think the 1150 1050 corridor. That's the very chunky support against which I think we trade pre-NFP. It would take quite a lot of power for the bears to push this below the 1050 ahead of the NFP. But if the NFP comes in bullish, no doubt in my mind we can break the 1000s, and we could certainly test the post-Brexit lows at 0950. This really changes the dynamic quite seriously, because the whole idea is that if the Fed really does go SEP hike, you're talking about potentially 50 basis points baked into the U.S. yield curve. That's a massive yield differential to the euro. It completely changes the whole gameplay in the currency market, and allows us for much longer, deeper, more meaningful moves. So we'll see. Dog days of summer looks like they're coming to an end. People are going to certainly perk their ears and pay attention. This is the last week of the dog days of summer, where everybody's on vacation, both Europe and the U.S. But the pre-positioning should be quite interesting. As I said, certainly 1350 seems to be the ceiling ahead of the event, and then the 1150 1050 corridor is where they're going to try and probe as the week progresses. Now on the dollar yen, the move here, really nice big breakout above. We needed to take out the 101.50 on a closing basis. We did that. Here, it seems reasonable to assume that we're certainly going to take out the 102s. 102.50 then becomes a much more serious resist point. If we can reach 103 ahead of the NFPs, that'd be quite bullish. Regardless of the moves, it really behooves, I think, us to consider the idea of buying anywhere close to 10, any kind of a dip close to 101s. Even on the open, if we can get 101.50s. I think it offers a very decent entry point here on any kind of a retrace dip for a move, certainly to the 102s, 102.50s on dollar yen on this continuation of the dollar rally starting this week. And then cable is quite a trade. We did turn off the 33s, but the trade here in the cable is actually softer. In other words, we're not turning down as much as we thought. One of the interesting things that I'm seeing in cable here, and this is, we talked about this last week. It worked very well. The turn in the euro pound. We're certainly going to address that probably this week. I think that trade is a continuation trade. I think the short euro pound trade can be a continuation trade this week as well, because when you're looking at the subcomponent charts here, the pound has really appears to have double bottomed here below the 130s, and even though it's clearly turning, the test of the 130s, as long as it can kind of hold the 130s relative to the euro, I think the pace of decline in the pound relative to the euro is going to be smaller. It's going to set up probably one of the stronger cross trades this week as we watch our markets. So that's kind of the major summary of the week. We're gonna try to buy the dips in dollar yen and see if we can ride at least the 102.50 ahead of the NFPs. With the euro, any kind of the reverse, sell any kind of rallies and see if you could push it down to 111.50, 110.50 zone. And with the pound, it's a more neutral status here. And I'm not really eager to trade the pound here this week on a pure pound basis. But on a euro pound basis, I think there's going to be some opportunities on the crosses. So we'll get to that in just a few minutes. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.